Hey everyone, doing a sound check. Just let me know you're hearing me all right. Getting a few minute late start, so it'll be about another 5 or 6 minutes before we kick the show up. Wonder why it's getting an echo here. Just 1 second. Let me know if it gets better right now. Is the echo gone away now? Okay, I think I've got all the settings right. Give me about 3 minutes. Got to get the Runa, some water, and we'll get ready to go here in just a couple minutes. Thanks a lot.
There's nothing that could have been done. Taken by a dreamer, believes all he reads are his past, and life will go on. Dormant spirits, they've risen, they hear us, they walk to the call of the Lamb. Driven to badness, no word from the madness. The clock on the wall stopped to 10. Yeah, but that's alright. It's alright, yeah. It's alright. It's alright, yeah, yeah. I say it's alright now, yeah. It's alright, yeah. It's alright, yeah. It's alright, yeah, yeah. Now, it's alright. Oh, yeah. It's alright.
Well, welcome everyone. Sorry for the slight delay this morning. Had a lot of things going on today. Anyway, welcome. A lot to talk about today. I've been talking to you folks about the MMT situation that we're about to deal with, and already have been dealing with for some time actually. And there's been it's not the first time that these events have happened. So in today's stream, what I'm planning on doing, and let me know, make sure that everything's okay with the sound, right? Just because we were having issues a minute ago. So just before I go too much further, go ahead and just give me some feedback on the sound. And I can already see the sound was non-existent, right? So, yeah, you're hearing me okay now, right? Okay, cool. Yeah, so basically what I'm going to do, I'm trying to figure out exactly what I'm going to cover this. Maybe up front, the markets are at least finally getting some volatility, even though they're kind of the meter's back to zero again. We're down a little bit on the session. For the most part, what we're seeing here is just this grinding out at these levels, and there's some potential for a large event to happen here from a standpoint of a possible reversal, but we're going to have to close under that 3,900 level that I've been talking about. So we're still getting an echo, huh? This is really strange. I don't know. I really don't want to stop this stream. Yeah, so just confirm that we're getting this echo. Interesting. Yeah, can you guys hear anything right now? I am really sorry. It's not my first rodeo, but it sure looks like it right now, right? Um, so let's try it now. My bet is it is better. Let's see what you say. Okay. All right. Okay, good. I figured out what was going on. Anyway, so let's rewind, start it again. The goal here today, I'm going to be talking about several things, and one of them will be modern monetary theory, and this is going to be something we're going to be dealing with. It actually has been, in some forms or another, was tried in the 60s, even though some of the proponents that are out there have been talking about it maybe from late 70s and beyond. But this is something that we're seeing, and with the current control in Washington, D.C., you're basically going to see a lot of experimentation. Some folks seem to think that the economy and us people are, we're like living in a test tube, and we're a big petri dish and see what we can get to grow, especially after this crap with the we've been through in the last year, right? So we're seeing a lot of this stuff continue to gradually unfold, but it's starting to accelerate. New administrations had just a month, not even, and there's a lot of things that we're starting to see that are going to emerge even more. I think most of what I'm going to discuss, we're going to be seeing this somewhat in slow motion, but once we get Janet Yellen in place, she's already there. I hope you guys enjoyed my little fairy godmother little animation the other night. I just couldn't resist myself. I just kept picturing that scene in my head. But the bottom line is they're going to do virtually everything that you've heard, and you can start with the Bernie Sanders, and going back to his last two presidential runs that he had, as far as the rhetoric around all of that, and just talking about Medicare for all, and the whole thing that So I think what I'm going to do is I'm going to go ahead and just go on to this for not a real long time. I just want to set it up because I think it's things that we're going to see, and then we'll go right into market analysis. So we won't spend like a half hour on this or anything like that. But I do want to discuss it because there's some things that I think we're going to see on the spending side once Yellen gets a little more in place. They're working hard trying to figure out what's going to go on. Number one, they've got to get the 1.9 trillion new money out there, right? And what we've already seen, part of this MMT thing is the universal income. And if you don't think stimulus is that, they've just renamed universal income to stimulus, right? And so I've seen all kinds of proposals about giving $3,600 if you have kids per kid. I mean, all kinds of craziness, right? And all they're doing is plugging the hole of the disruption and the big holes they punched in the economy through shutting it down. And as we all know, there's a lot of things that just aren't going to come back. And there's been a destruction of small businesses, all types of things. And I'm sure most of you in your communities can see the carnage just all around you. I know certainly it's around up here in central Arizona and other places that have just been disrupted, and some things are trying to come back, but it's very difficult. And so the MMT, universal income, replacement of the dislocation of capital is what it's all about. And if you went back and watched videos that I talked about last year, what you're going to see from watching those videos is I remember one back in March. It was the unintended consequences, which was socialism, and now we actually theoretically we voted in socialism, everybody, that's what America wants. So that's we'll see how this thing all plays out in the end. But we're going to see a continuation of massive manipulation of the markets, starting with the Fed and then the Treasury, and then all these programs that are going to start to come out. And ultimately, I will tell you this, and this is my opinion, the wealth gap will be the largest it's ever been. It's going to get bigger. I made a side comment in a video the other night that, it's possible we could see the S&P go to 10,000 or something ridiculous in this type of scenario. And I know you folks, I know I've seen some names that have been hanging around for a while. And, I talked about, Japan in the 1980s and what happened there. They just inflated assets and it went just vertical. And that's what we're seeing here right now, especially, if you look at real estate, the stock market, there's elements there that are really are exploding. And those two areas in itself are very divisive from the standpoint of who can play in those markets and who's going to benefit from those markets. So, the guy renting the apartment building isn't benefiting from this unless maybe you're able to play in the stock market and make some money. And, there's just, I think what I'm going to here, excuse me, every time I do one of these things, I took an allergy pill, so I'm getting a runny nose. I may have to time out in a minute. I'm getting a little sniffle. But the point of all of this is that we're going to continue to see money pumped in, and that's why you're seeing these markets act like this. I've just watching the day-to-day activity and trying to do analysis like we do, like I said in opening comments early on, was, we finally, at least today, saw volatility kick back in a little bit. We actually printed RXT and STX all in the same day. But as I've been talking about on the channel, the market grid has been contracting, so it's gotten very small. So it's not as dramatic as it sounds. But when we get into the details here in a minute on the technicals, we'll cover all what's likely to go. So the whole MMT thing, I've talked about this, and originally when Biden got elected, I thought we'd see massive increases in taxes and all that. And that's not how it's going to work out. What's going to happen is they're going to start to print the money. Ben Bernanke revealed it, but everybody knows it. The Fed creates money by opening the balance, opening up the spreadsheet, adding zeros, hit save, close spreadsheet, more money's there. But you have to have the facility which to spend that money. And that's through the Treasury, that's through programs, different type of fiscal programs and spending programs. And remember, every time you hear Chairman Powell talk, we have lending powers, not spending powers. He says that at least 5 times in every speech that he makes. And so he's making that clear. Now he really should say, thanks to Janet Yellen being in the Treasury, we now have spending powers too, because they will be the team. And I never imagined when I was saying that the Fed and the Treasury had to be a team going back to, mid last year, June, July last year, it was obvious that's how it was going to have to work. But in the end, what happened was, we had to move all the way in, new administration, and now we have the ex-Fed chair as the head of the Treasury. And now the team is united. I didn't realize that the team really was a team and they would be reunited. So, so what's the favorite word out there right now is bubble, right? Everything's a bubble. There was some guy I used to follow on Twitter, but he decided, I was a little bit of a troll. I was kind of giving him a hard time, but everything's a bubble. And when you're when you believe everything's a bubble, there's no way you can, when you're that sarcastic, it's hard for you to participate in markets. And I've seen some crazy markets, and not just looking at stock indexes, right? There's been plenty of stocks and just so many things. And I've been doing this a long time, that you see these spikes, you see these crazy manias in individual stocks, commodities, you name it. They happen all the time. So there's nothing new going on here. It's just that the difference is that, and I talked about this a little bit when we were talking about, I think we were talking in a Wave Tech training even this week or last week, that what we saw with the whole GameStop situation and the short squeeze was the acknowledgement of how many of us know what's going on. When I started in the business, we had all the information. I started in 1979. We still had ticker tapes back then. We had Reuters news lines. There was paper that printed, and we used to pull the paper off every hour and put it in these little clips and hang them. So if you want to see what news was last hour, you have to go through and look through the tape, right? And then finally we got news on our screen where it would be digital, somewhat of a digital news on a screen. But we, the broker dealers and Wall Street, we had all the information. So if you wanted the information, you had to come and get it from us, and you had to pay giant commissions. I mean, it was like to buy 100 shares of IBM back in the day was like $200 to buy 100 shares. It was amazing. And, we did 40 million shares in a day. And I just want to bring this context in because, what we were, this thing's come a long ways. Now we're doing billions of shares every day where there's no ticket fees. Everything's been eliminated. But we had all the information back in the day. And now everybody has all the information. There's 100% transparency. Very little information that flows around Wall Street somehow, some way we can't find through a group, through a blog, through a newsline, through whatever, through the internet. So the transparency is all there. And that became very obvious. And, it's that's what we're seeing in this world. So now when we go back to, I'll get back on track here, going back to the whole MMT thing, the spending is going to come. The 1.9 trillion is the tip of the iceberg. There will be other programs. And depending on what type of action that comes out of this, whether you start to hear more about the Green New Deal, all of those things, that is going to be, we're just going to have to listen and watch and see what's going on and pay attention to the markets. But the 1.9 trillion deal is very important to the beginning. This is not the end game. This is the beginning of the new game of 2 trillion. And you could see the debt in this country may not go up as much as they create this new currency. And that's the whole point of MMT. Will it work? Will we end up as in Zimbabwe or in Venezuela, where we have massive inflation? That's certainly possible. The architects of this particular deal will tell you that they have a better handle on it, and they just may. They may pull it off. It may work for 6 months. It may work for 6 years. It may work for 60 years. No one knows. I'm not trying to propose I have any clue here, okay, on how that's going to play out. But what I do know is it's coming. And this is the thing that I've been really good at. I know I'm not sure who's on the chat line, but I've got customers that have been with me using Wave Tech, using Portfolio Expert for over 20 years. And the realities are I've been very good at finding these little spots and kind of looking forward at what's going on. And this stuff is coming. Everybody, we all know it. I'm not actually even saying anything that's even brilliant. The question is how do we deal with it? How do we play into it? And all of those things. And, I just wanted to cover that because I'm not, at the moment, I don't have anything to discredit or wave a flag and say, hey, MMT's the answer, that's the new world. We're all going to end up on Star Trek and have a little swish. Everybody's going to wear the same clothes, and that's the world we're going to, you know. I don't know where this thing is going right now, but I do know it's coming, and I do know it's going to inflate assets. I do know they're going to create the largest gap between the have and the have-nots that have ever been. And it's funny because the whole thing is they're saying they're going to narrow that gap, and the opposite will happen. And it's obvious already if you just look back at market action going back to last year. March 9th was the line in the sand that the Fed drew. Once they told everybody they're going to buy assets, we're going to do whatever it takes to support this, that was the beginning of the game. I think on March 26th, we saw like 5,000 or 6,000 buy signals come out of our short-term models, and we all know what's happened since. So let's go ahead and dig into these markets, start talking about some of this stuff. I'll look at some of the chats and see what you guys are talking about, so I can kind of respond. But I told everybody that I was going to talk about this a little bit, and I think I've done that. So let's move on and start to look at some charts here. So as I mentioned a minute ago in some of my comments, is we've got SPX up here right now. The high-low for the day, we put up something here. The high-low for the day is 31.50, and RXT was 39.74, so that's 39.34.74 was the RTX number. So we did trade above that for a few seconds. We reversed and traded all the way down below 38.91, which was STX, all the way down to 38.84. In last night's video, I was mentioning that we were, this contraction, and when I talk about the contraction, the market grid gets very, very tight, and that usually indicates a change, and it's usually down. And so, these indicators that I use here are expanding now, so that's a good thing. But we're seeing this contraction of the database of the market grid, which will tell us that we're going to see some downside. The 10-period moving average is going to be our major player. I talked about that in last night's video. That's going to be the next point that will be a convergence of price and the moving average. And that's right now at 38.42. It's going up about almost 20 handles a day. So that's going to be 60, 80, right where the low was today. And in 2 sessions by Friday, that will be major support. So this is, in some ways, it's encouraging, but we still need even a larger expansion of volatility to get a pattern going. I've talked a lot about this, these dragon head formations. We're still not at that level. We're going to have to see a much more volatility. Daily range volatility is going to be, is going to expand out eventually. But right now it's still narrow, even though we expanded. It's so tight that it's not even a big deal what happened today. We're looking at 50 handles. Remember, we've had 150 point days, so this is going to get down. And by the way, I mentioned, and I apologize, I was going to put on some charts on Tesla and Apple last night's video, because it was really obvious that both of those stocks are rolling over, and I just don't see two major components in the S&P rolling over and doing that. So maybe what we'll do here is we'll kind of tie together all of this stuff that's going on right now. We've got just craziness going everywhere in the markets, the cryptos, with Bitcoin almost hitting 50,000. It's just some crazy stuff. So, but yeah, so let's go ahead and look at the weekly chart, because I want to set this up a little bit. And we're still now on a weekly basis. We've got a pretty big range that is likely. And I talked a lot about this in the last couple of videos. R1 weekly is 39.20. Now this is SPX weekly. And that, I said we might trade a little bit above that, but I don't think we're going to be able to stay above it. We printed 31 and we just crashed. I mean, that thing just flipped on a dime this morning. And so the S1 number is 38.53. So we haven't hit there. I think we're going to probably see 38.53, which will be the convergence of price on the 10-day moving average and on the and on S1 here on a weekly. I think those things are all going to come into play here. And the PPMs are positive, but there's no expansion. I keep talking about this thing. Hang on 1 second here. I keep talking about something called VIG, and and the VIG is what we used to refer to as just the momentum. And there's no momentum in this market, but we're seeing something that I've talked a lot about, and I'm going to draw something on the screen. And this is what's been going on here for a while, and this goes back to July. You'll probably go back and watch some videos that I did in July and August and see me talking about what's going on. And I talked a lot about with the PPMs, these indicators that I use. They're proprietary indicators. They're not on the internet anywhere yet. But the PPMs actually show a price, how the prices are expanding. And one of the things I talk a lot about is that momentum precedes price. And I'm going to draw this in because I want you folks to be able to see this, and then we'll discuss what it means. So what I'm talking about, these indicators, this is momentum precedes price. So it's interesting, each one of these indicators here, PPM 1, 2, and 3, measure 3 levels of trend within a trend. So I talk about this a lot. It goes into the wave tech theory, goes through everything that I discuss all the time, is that within one trend, there's a minor trend, a primary trend, and then a secular or longer term trend. This happens on internally, whether it's a weekly, daily, 5-minute chart, all this stuff happens from a trending standpoint. And so when we take a look at this, I'm going to draw these back in. PPM1 is the shortest. It tracks the 10-period moving average. And you'll see it peaked out right here. And then I talk about this a lot. It goes into a sideways maintenance mode. This is all it has to do. We spiked it. It's like if you had a half pipe and you put a ball on one side of the half pipe and it rolls over and it just rolls back and forth until all the ball's down in the center of the pipe, right? And it's the same thing here. Once you boost it and you get that push, then all you're seeing here on this sideways movement is the momentum maintaining, and the ball ends up setting on the bottom of the pipe. But it happens at different levels. So this was phase 1 of the trend. Phase 2 of the trend was in this spike, which was back in August. And then we had, right at the beginning of the year, we get the PPM 3 to kick in. And what this does is this sets the tone for this. I'm going to take this off so I can show you what I'm talking about. I'm going to slide this chart over just so you can see what I'm talking about here. What's going to happen with this, and this is when you're looking at intermediate, and I'll bring up a monthly chart here in a minute. I think this is a worthwhile discussion to have. But here again, we'll talk about this. Here's the momentum first, and they come at different levels, and they come as this indicator here tracks the red line, the 10-period moving average. This indicator here is tracking the cyan line, which is the 21-week moving average, and then this last one is tracking this green average. And when you get to in a trend mode, you get these averages. Actually, they're spread out within each other, right? So they're just they have it. This is the trend, and the market will trade within this trend as it goes up. And so we get these little ebbs and flows of the markets as they do this stuff. So what's likely to happen here on this 40 or this 40-week moving average? I'm going to take this stuff off. I can't show you some of the numbers, but we're going to get this sideways momentum mode to last probably for a little bit longer. And this is what, if we go to the WaveTech database, this is why our database is 84% long right now, because these trends are evolving, and too many, I'll break down a lot of things that I wanted to talk about today, but this is the trends that we're dealing with right now. This is SPX weekly, right? So let's bring up a monthly graph here just for a second. So when you start to look at the monthly, there's something else going on here that even is more phenomenal along the same thought of analysis that I just presented to you. So here is the spike. Here's our spikes in momentum. 3 of them here. And it's interesting about this on a secular basis, they are absolutely happening at the same time. I'm going to clear these off. I want to show you. Let's go back a step. Let's go back to 2016. Here's your, this one's not as dramatic, but it's there. So we get these, this is how this thing always works, this indicator. It's not overbought, oversold, it's not RSI. It's all it does is measure the percent change of the moving averages and the first and second derivatives, which give us some probability when the moving average is going to get penetrated from one side or the other. And so what we're seeing here, if we just look at this goes back to 2016. This trend that we're still in started back in 2016. There's a lot of people trying to do the auto reset, the fact that we had this big decline over here, that this, now we started a new bull market. Well, I'm going to say that maybe that's true. I just don't look at things and put things into those terms. But the basic thing that's going on here is this. Once we go to the latest configuration in these markets, we're getting these 3 spikes I was discussing a minute ago. And in these 3 spikes now, we're getting that momentum first, and then we get the maintenance. So what we should see is momentum will back off a bit, and then we get into the sideways maintenance mode. And what that tells you, and this is why what I'm going to show you next is some of the longer term objectives, minimum objectives of 46 to 5,000 on the S&P. These are big numbers, and this is what the analysis is telling us. You can go just because it's at an all-time new high that this must be a bubble. Well, that's that's certainly possible, right? From that standpoint, maybe it's a bubble. I don't even know what a bubble is. Those kind of thoughts, those are the kind of things that get you into trouble. And those of you, I know we've got a fair amount of software users from us, and I talk about this a lot on our training sessions that we do, is I talk about process over attitude and opinion. when you talk about bubbles and you talk about things, you start to limit what can happen. You start to form attitudes and opinions. And the tagline is process over attitude and opinions, is that attitudes and opinions keep you out when you should be in and in when you should be out. And that's why you have to have a process. And I've been Mr. Process King for a very long time, going back into the 80s. And I've been using the same basic techniques. These indicators that I'm showing you, we developed in 1983. The rules came out of from 83 to around 80, probably 86, maybe 87. So these are very old, as I say, tested in the trenches, ideas and concepts that have been used literally to manage a lot of money. Now, our software, just with our advisory community, we've actually helped to manage with that software $250 billion over the last 20 years. So, we're looking at, this stuff is well tested, but I'm just giving you the theory and talking about these things because this is helping to understand the channel and some other things. And I'm going to bring up the database here in a minute because there's a lot of stuff that can be garnered from looking at the database. And I think I'm just going to stay on this roll I'm on for today and be able to talk to you about some of these longer term trends and what they mean. And, and then we'll get into individual stocks and some other concepts and ideas. We usually do these live streams every Wednesday for about 3 hours. I had a very interesting conversation with an old friend. Won't drop any names. I'm hoping that we briefly discussed with having him come on and us having a little debate and talk about some of these things that I'm talking about here right now. We had an interesting talk yesterday and yesterday morning. So these are things I want to bring out to our community and all of that. So so somebody, this is funny, I almost mentioned Harry Dent. I think he's been bearish since 1980. I'm joking. The guy is a perma bear. I can't believe he still sells newsletters. That's amazing. Anyway, but yeah, so that's where you get stuck. See, Harry Dent has an opinion. And I try to flow with what these things are telling us, and that's why I'm showing you some of the thought process behind things so that you understand the channel, trying to help a few of the trolls out there because they have trouble understanding certain types of concepts. So there's a lot of thought and concept and a lot of techniques that have been developed over a very long period of time, and they've also been tested over a period of time. So, so this is, as we look at this long-term situation, this thing, it's way bigger than you imagine. I was right in there with everybody last February, March, when this thing was rolling over, turning the keys off on the economy, taking all the fuel out of the tank. That just seemed catastrophic, and it was, right? But then the first signs of what this show and the theme of this live stream today is going to end up that is about MMT, right? This is March 9th, Federal Reserve saying we will buy every asset that's in distress. We don't care what it is. And, you just need to know also that Janet Yellen was one of the voices on the Fed that was a proponent of buying equities to support the market. So will we have a correction someday? Sure we will. Will it be supported? Sure it will. We've seen how the asset prices and the construction of the markets have become such an important part. They always have been, but now with the digital flow of everything, that is going to be even more so going forward. I said this earlier, universal income, AKA stimulus, okay? They're going to keep coming up with these programs, and we just have to pay attention as investors. We don't have to have attitudes to pay attention, and I'm going to go through the database when I finish this little section here right now. But I want to go back to the long-term chart here just so you can see exactly what's going on here. Like I said, this is potentially, I'm gonna change, bear with me, I am going to change the scaling on this thing here. Okay, so what I did was I made the top end of the scale 6,000. Okay, so we're at 3,900. But we start to look at this, and this is one of the things that I talk a lot about, folks, is I don't like the use of trend lines. I don't like anything that I draw that can have any subjectivity. And I know people that use trend lines will argue, well, if you use them properly, you draw them from the proper points. Well, that's in itself is a controversy. You know, there's a lot of different theories on where and how. So what I use moving averages. The PPMs are about the understanding the probabilities around moving averages, when they'll hold, when the market will stay above, when it will go through, when trends are going to change. That's why I've spent, you know, my entire career, literally since 1983, is when this concept came into play. And so this has driven my entire career. So I'm somewhat of a one-trick pony, but it's worked. It's made money. I've operated my entire career doing this stuff. So I'm going to, you know, this is what it's about. But here's what I want to show you on a long-term basis. So if you think this is a bubble, as they say, you haven't seen anything yet. And I can start to stretch scales and change the scaling so that it looks vertical. That's no problem. But when we start to look at things from where they are and looking at this secular chart, this monthly graph, you're going to get a very good feel for what I'm talking about here. So let's go back, just step back for a second, and let's talk about this momentum first. Momentum first, followed by price. So with all three of these kicking in at once, I was part of a group many years ago. We were talking about markets and what's the most powerful signal that I ever see. And this is it, actually, when all three of these things do exactly the same thing at the same time. What this is setting is that these trends or these moving averages that we see here, as these are long-term trends, and just drawing ahead, this isn't the exact trajectory of these, but if you started to do some linear regressions looking out, you come up with some interesting thoughts on this thing. But this is the projection. As far as 4,600 goes, I mean, just looking at this weekly 10-period moving average at 2.96, that is, I know these numbers don't mean anything to you folks like they do me, but 2.96 ppm1 is monster. I've seen bigger, but it's so big that it doesn't matter how big it is, other than it tells us that there's less than a 10% probability that the market will drop below that 10-month moving average. Now, it's quite a ways under the markets right now, but that number is going to be the key number. Right now, that number is 2728. I think I have it marked right. Let me clear this out, just make sure I do. I'm sorry, the number is 3454, and that number is going up by 100 points per month. So 5 months from now, that number's 4,400. 6 months, you get the number. If it stays close to that in 6 months or 6 to 8 months, the moving average, okay, let me make this clear. The moving average itself will be 4,600. So that value, that 3,400, we're not going to get anywhere near that. There's plenty of support numbers below that, but if we did, that would be your ultimate buy if you saw that. That's exactly what would happen. Yeah, so this is So I just want you to have this perspective here on as far as what's going on. We're also already, what is this? The 10th of the month. We're almost trading the STX number on, let me bring that on screen so you folks can see that. The RTX number is 3947 for the month. So we've already basically played out the major part of this. We had a high today of 39.31. So we've already played out a lot of this already, okay? So I'm going to stay on this thread for a little bit longer because I think it's important for you to have this perspective. And this doesn't mean all stocks are going up, doesn't mean any of that stuff, but I am going to show you a whole bunch of other metrics here before I finish this on why we're, at least for that next 6 months, things are going to continue. So, you know, if you want, so anybody that you see on Wall Street saying that the market's going to 4,600, no one wants to be, how can I say, no one wants to say what happens. I was talking to this buddy of mine yesterday. I'm trying to come on, and he makes a lot of long-term projections. I've done it as well. My old nickname on the trading floor was Dr. Given. And Dr. Given was, I would say, hey, this is going here, it's going there, whether it was an index or a stock or whatever, just buy it, it's going there. So I got this nickname called Dr. Given. And this is a Dr. Given trade, I'm telling you. These metrics aren't going to change by very much, even if the markets were to back up a couple hundred points on the S&P. These longer term trends are very solid, very much in place, and they're not going anywhere. So back to our scenario here is that these markets will continue to evolve. They'll continue to push in this trend. 4,600 is a given. There's even bigger numbers out there, I believe. And, you know, that doesn't mean we couldn't come back to that 10-period moving average. I just told you it's 34.54. It's on the screen here. And so there's, within this secular trend, a lot is possible. So our job, once again, is to find these assets and all that. And, our software group, our wave tech group, and all that is really where it's at from the standpoint of really a think tank and putting things together. Like we released all of our stock screens yesterday. So we have a stock screening service. So we have literally hundreds of stocks that meet metrics that can be used to build portfolios and to watch. So these are things that are metrics that we have built over the years that we have a high level of confidence in finding these things. So this is what we're supposed to be doing. And there'll be other trendy stocks, you know, maybe we'll go through Tesla here shortly. Maybe Tesla's played out, maybe it's not, you know. But there'll be other stocks to emerge, just like what we've seen, and there'll be a rotation. And anybody that's been around the markets a few years knows that there's more stocks. The pile of delisted stocks is really high compared to the number of stocks that are traded. Now, in this day and age, there's a lot of stocks out there, right? Our database, we cover 16,400 symbols in our database. And that's just U.S. domestic, right? So anyway, so let's carry this long-term thought out, and then we'll talk about some other elements that I think are important from the standpoint of understanding some of the things that we're likely to see as we go forward. So back to the drawing board. Back to this theory of momentum precedes price, and that these indicators, momentum will drop off, and then they will find a stabilization point, and they'll basically do a pattern like this, and you'll be able to draw like a straight line through the middle of all this, just like we did on over here and all of these patterns. This is a monthly SPX. So right now we're looking back to around 2014. I'm not going to go back further than that. In the past, I've went back, 40, 50, 60 years even to look at this stuff. That's not necessary for this analysis. But as I said, these trends are going to be at what point. It's sort of like if you're looking at, you went to an air show and you got the biplanes and the guy goes vertical. It's finally he runs out of power, he can't go vertical and it rolls over. That's the bubble scenario, right? This is a different scenario. These lines are going to have these three trends within a trend is important to understand in the concept, okay? So even though your short-term trend maybe rolls over, your intermediate and longer-term elements of this chart continue to be in play. And sometimes the influence of those longer-term trends keep a bid in or an offer, whether it's a bid, whether it's a bullish trend or a bearish trend. So these are things that will drive everything. But this particular trend, if we were to extrapolate it out to other trends, like I said, that we look at this trend really started in 2016. We had a little spike down. We had two spikes. We had the 2018, fourth quarter 2018, then we had this spike last year, and we probably we wouldn't have had that spike if it wasn't for shutting down the economy last year, right? This thing was on a trajectory anyway. It just got back into trajectory because the Fed and all the pumping of money and all the replacement of the dislocated cash that I've talked a lot about on this channel for a year almost, the better part of the year. I've been talking about the dislocation of capital. Well, they replaced the dislocation. They said, oh, wait, we'll create this fiat money and go from here. Kind of mixing in the MMT thing, but one of the MMT ideas is that, it used to be you can make a profit on how much it cost you to create that dollar bill, right? And it used to be maybe like 96% of that was a profit from printing it because you had to print the bill. But these are all digital, so there's not even any real dollars being printed to back this up. And that's why you're seeing all kinds of governments, including I saw a story in the last few weeks that India is looking to do their own cryptocurrency or digital currency. Because guess what? They can do this too. This will be the strategy in every country that has its own currency, that it can go out and just do this digital. There's no cost in creating digital dollars. So this is going, I'm telling you, if I'm wrong on this one, that I guess I'll have to take this one to my grave, because I don't believe I'm going to be wrong about this, because it's what's happening, and it's one of the things that everybody's kind of buying in to this scenario right now, and that's exactly what I'm talking about here. I think I'm kind of stuck in a loop, so I'm trying to get out right now. Let's take a look at something here, and I want to bring up Wave Tech for a minute, because I just want to talk about the database and correlate that with this chart that we have on the screen right now. So bring up Wave Tech here, and what we're looking at is the market grid that gets posted inside of Wave Tech every night. So this has quite a few symbols. I think there's 55 on the grid right now. But what I want to look at here is we go to the research tool, and we're looking at the weekly database here, and this is 16,000, my cursor's there, 16,443 total symbols. 13,860 symbols actually are in trends right now, and 84.29% of them are in trends. We go over to the All Stats page. I'm gonna flip over to the daily and then go to All Stats. I want to show you this stuff here. I know I cover it every night on the channel, but I want to break it down a little more than some brief comments. But one of the things that I've been talking about, the weekly has a holding period of about 201 days on average, and this is optimized model. There's two models, so the best of the two, the best of breed is what we're talking about here. Right now, the current duration, average current duration is 78. The percentage fulfilled is about 40%. And this is something, as we flop back, I'm going to bring you back to this chart for a second. As we look at this monthly graph, this is why those trajectories of those moving averages are important to understand, because with that, the forward-looking database and the trends that our models have recognized are telling us that there's still 60%, well, they never goes to 100%, but 40% of the duration is still ahead of us. And I'm going back to the database, and what we're looking at here is at the percent of the profit. So the average standard profit is 29. The standard deviation of that profit is 71% return. But what we're looking at right now is interesting, because this is somewhat of a concern of mine, but the duration, we're seeing these metrics kind of changing as the markets unfold right now. But right now, 91% of the average returns are fulfilled right now. So that's pretty stretched out from a return standpoint. And this is something that I continue to talk about. You have to look at both the expected returns within the cycle and the expected holding periods. And right now the mismatch is that we're only 40% of the expected holding period, while 90% of the returns have been realized. My expectation is that we're going to see a lot of things move toward a standard deviation above. We're in one of those cycles that this is going to extend, and more of that duration will be, I think, somewhere around, right now it's 40% of the duration on the intermediate. It'll be somewhere in the 60, we'll call it the 60 to 70% level, from where that thing will ultimately get to a point where maybe there's a correction or some type of thing that will happen there. Okay? So just that perspective of the database is important, because that helps to understand, going back to the long-term S&P chart, this underlying trend that is going. When I tell you folks all the time, I'm the luckiest guy in the markets, because I'm actually watching 16,400 symbols. I'm not drawing trend lines on an S&P chart. That's not how I'm doing my analysis. So this is, I'm bringing in this in-depth view of the thought process of what's going on in the markets and why they're likely to continue along this path. And, so let's see. I think what I would like to do next is I want to touch on interest rates for a minute. I'm going to do a quick run. Interest rates, the Dow, we'll hit the metals. We'll finish with Bitcoin. What time are we getting to be? Yeah, that'll put us into about the last hour of the stream, and then we can start to dig into some individual stocks and all that. And Leva, I agree. Crude oil needs to be talked about. I did a quick little snap the other day. On crude oil, so we'll definitely touch that as well. Yes, Thomas, the PPMs are the primary driver of all trading signals. And there's actually, inside of WaveTech, there's 60 rules about, there's almost 600 variables that are considered within the rules. And there's a combination of the moving average, the position of the market moving average, the PPMs, and there's a statistical map that lays inside of the software to help make these decisions. And so that's, yeah, so we'll talk about that. Okay. So we're going to go to we're going to go to the 10-year for a minute, and I want to cover the 10-year. We're going to look at the 530 spreads. We're going to look at some yield curve stuff really quick, just to have a perspective. Now, this is an interesting chart because we're seeing this thing stall out here right around this 1.2 mark, 1.195. So we're right at that 1.2. I've talked about the importance of 1.21. That's major resistance, and I believe we're just going to continue to stay up. You know, it's going to be a 0.2, 0.5 to you know, maybe a 0.22, might get above this 0.21, but we're definitely going to see a stabilization of rates at a much higher level. So this is daily. Let's get a weekly perspective quickly. And the weekly perspective here, I've talked a lot about us maybe getting up to the 200-week moving average on this thing, which is at 2%. I remember, and I'll show you in a minute when I will cover crude oil, is that crude oil, that was something I talked about quite a long time ago, going back in the crude oil collapse, and talking about once it stabilized that we were going to head back to the 200-week moving average, which we are doing right now. And yeah, Keith Lindsay, I actually agree. Sentiment is greater than fundamentals. It's always better. It's always more important. It's not just in this bubble world. Okay, so as we look at the weekly trends are there. Everything I just told you, by the way, let's move this over so you can see this. Everything I told you about the momentum proceeds. I'm kind of in teaching mode today, I guess. But here it is again. Momentum, maintenance, momentum, maintenance. This has, we got, so all three levels. So one kicked in over here on this spike. This one kicked in here. And then now we have the longer term coming in. And what this is doing is setting the trajectory slope of this market. Now I've drawn a straight line. You know it's not going to be a straight line. Don't say Kendall said it was going up in a straight line, because I didn't. But this is going to be, the demand line will be these moving averages on a weekly basis. I'll show you something on a monthly chart here in a minute. But all of these markets, so you can see higher yields, higher stock markets, and the way that they offset some of this spending and money they're going to do is going to be through a combination of taxation and a combination of raising interest rates to suck some of the excess money. Because you have to realize that, you know, the whole premise of the MMT thing that I was talking about earlier is that, you know, the MMT folks believe the governments can control the inflation by spending less or withdrawing money from the economy through taxes and also through borrowing and through debt. So there's a number of things that do it. And, you know, can the engineers, if this thing gets played out to the full level, can the engineers actually get played out and can they engineer this thing? You know, that's the ultimate term, financial engineering, right? So, but anyway, this trajectory is definitely what's going to happen. let's take a look at the monthly very quickly and set up this thing here, because this will kind of complete what we're talking about here. I am going to see how much of this chart I can bring in. I want a little longer term perspective. I'm not sure how far this chart goes back. We're going to find out. Okay, pretty good. All right, so we've got a nice perspective here. This is the beginning of my career. This is 81, so we're not even quite there. Let me see if I can go back one more notch. Nope, that's it. So 40 years gets me. Rates have been declining all this time. This is a long-term trend. And my brother and I were talking just the other day. It was an interesting conversation. I was talking about a house that I bought in California in 1986, I think it was. And my interest rate on the loan was 13 and a half, almost 14%. And didn't think twice, right? Bought the house. Housing market was strong. If you look at housing starts back in the 80s, they were insanely good, and interest rates were high. So interest rates really didn't have much to do with it. The offset was appreciation and what was going on in the marketplace. So regardless of, and we know this, okay? Inherently, we know that the lower the rates, the worse things are. The rates do matter, but usually when rates are, really low, I remember back in the day, if they raise rates one more, if rates go up from 13 to 14, the housing market will die. Well, when you look at it now, if they raise the interest rates from 2% to 3% or 4% like they have, the market will die. Well, it's not dying. And it's not about that. There's other economics behind that. But this chart, what I want to show you is that the scenario that we're talking about here, look at this ppms here. This really brings in a perspective. This thing is just spiking. So everything I just told you, see if I can move this. I don't know, I'm zoomed out all the way, so it won't let me move it over. But you can see that ppm1 is just spiked up. ppm2 is about to take out its second derivative, and this is a long-term chart. This is a 40-year chart that we're looking at. And when you start to look at this, there's no problem, in my opinion, of, this level right here is the 2% level. Let me draw this in so we make sure I get all your eyes focused at the right place. This point right here is 2%. See, here's 1.9, just draw it straight across here. When we start to get up to the 200-month moving average, we're just now hitting the extreme long-term trend, and that's up at almost 3%. So this slope is not going to go straight up. Wouldn't be surprised if there's a hiccup and a right shoulder and then a move up to these levels. But the trends and the way that we turned is absolutely important to understand. Look at this set of what's happening. My guess is we'll see all three of these indicators, but they will come in like always at different points on the timeline. But ppm1 has already kicked in. This upward momentum will bleed off, and then it will go into maintenance mode. So interest rates will continue to move higher. Now, the question is then, is going back to our whole theme of today and talking about the potential effects of MMT or all these things. So higher interest rates, does that mean more inflation? Probably. Think about one more thing. I'm going to take you to you pick Jerome Powell's speech that you want to listen to, or since March 9th of last year. And you listen to every one. Of course, they're almost identical with a couple little changes. his speeches are as boring as the text that they released before his speeches. But he keeps telling you that we're going to be willing to deal with a higher level of inflation going forward. Absolutely, we're going to have to deal with it. We're going to allow inflation to run ahead of expectations. So this whole scenario, MMT, now that we have the fairy godmother and Janet Yellen in place to spend money on the fiscal side, they're going to play this game. And it's actually almost like a game. It's like a video game to them. When you can sit there with a balance sheet and create fiat currency out of thin air, and maybe there'll be, if you think about it, we already have the dollar's already digital. There's really not a lot of dollars. Everybody's got a little card. And I know somebody that received, by the way, they were sending checks out, right, for the stimulus. Now they're sending credit cards out. And there's a credit card, and you get the credit card, and all they have to do now, once you authenticate that card, they have a number, so they don't even need to spend the money in the mail to do everything. They just put the money in the account. Universal income / stimulus, right? That's what's going on. So they've already started the digital currency just through the stimulus and the release of the Treasury putting out basically debit cards, right? And they even have rules. I saw the list. They even have the rules of what you can do with the money that you can get from that card. You can withdraw it in cash. You can do all kinds of stuff. Put it in an account. You can buy things with it. It's absolutely, it's universal income. And so that's already out there. And so once they get that distribution of the cards, the cost will be the initial card, right? And so they've looked at it. They've looked at the cost of distributing this money, and that the cards longer term over some part of time, that's going to be much cheaper. Think about something else. Why would they put cards out if they wasn't going to keep doing it, right? It's one thing to send out a check and say, hey, we sent you the one-time check. No, we're sending you a debit card, and we'll fill it up for you once in a while. So anyway, it's crazy stuff, folks, that we're seeing. And like I said, maybe we all end up with our little swish, like our Nike swish, and we end up all wearing the same clothes, and we're on Star Trek, and we just ultimately we hang out with Elon Musk, going to different planets in the galaxy. Anyway. Yeah, exactly, Don. Don't throw the card away. Okay, so long-term trends, interest rates up. All right. Only natural place to go from here is to go to the dollar. So, great. This is perfect. So now I have a 40-year chart of the dollar. Yeah, so I'm just looking at the some of the comments that you folks are making. Yeah, exactly. I didn't get a card either. So let's see here. Okay, just taking a look at a couple things here. So yeah, the dollar long term, the depths of the dollar was back in '08, and if we still have negative trends. This is the 40-year chart we're looking at. So this is kind of good that we went from a 40-year interest rate chart to that as well. And I remember back in the day, here's 1985, we had this big run on the Dow. This was basically the beginning of the Reagan administration and all the changes in taxation and everything that happened, deregulation, everything. The Dow was king. By 1986, it started to roll over, and then, we can see coming in here, just kind of related. This was a pretty strong time during the Clinton times, and then Bush, Obama, and the Dow boost up here as we came into 15 and 16, and now we've weakened back to this 200-month moving average, but we have negative rates on everything on the Dow right now. So, in spite of the interest rate scenario that I talked about at the moment, the Dow is just trading on major support, and I've talked about this on the channel a number of times. And this is exactly the major support for the Dow. It's going to be locked into 93, 95. There's not a long-term bull market coming in the Dow in any way. In fact, we're still highly negative at the moment, but I think we're putting in a major bottom, but it's going to be more of the same that we've seen going back from 15 forward. It's just going to be in this sideways range here. So this little band right here is where it's going. This is where it's going to stay above this 200-day, and it's just going to waffle in this pattern. Does it go this way or this way? That will depend on how this MMT plan works out. Right now, I think we're about to, if I erase this, if we go back to here, I think we're about just to see a little bit of a move back into the monthly moving averages between 93 and 95. No big deal there. But those kind of numbers aren't going to bode well for the markets I'm going to talk about next, because we're going to look at gold and silver and just see how that goes. This whole scenario of squeezing silver and everything, it's kind of interesting. I guess this scenario that happened with GameStop has to be played out at some level, right? To see, is there any other markets that we can manipulate? And I saw a comment on the channel that I'm not familiar with this, that how something could come out and triple on just rumors. Well, that's how, is that you just get the stampedes to show up. And that's one of the things in the markets that we've never seen. And I'm going to make a book suggestion for you. I've done a couple of these in the past. I really need to be a better YouTuber, right? I should have an affiliate link and say, hey, click the link down. I don't have it. Okay, so on your own. But if you haven't read Reminiscences of a Stock Operator, and if you're in some of these blogs, if people want to really find out about it, you think the little Wall Street bets was the first time that's been done? No. This stuff goes back to the turn of the century, of the previous century. Back to the 1900s, but you will if you read Reminiscences. There's a couple books on Jesse Livermore. Jesse Livermore was believed to be the most successful trader ever, and had a very sad life at the end. Had a lot of stuff go wrong, but the guy was amazing. Started trading at 15. In 1929, he made $100 million. And I took and converted 1929 dollars to current dollars. It's like 1.1 trillion or 1.5 trillion dollars he made on the crash of 29. In fact, people blame the crash of 29 on him. But the reason why I bring up the book, Reminiscences of a Stock Operator, I'm going to see if I can bring that up on our friends. Bear with me 1 second. You know what I have? Hang on. I have it on my desk because I brought it out. So this is it. Reminiscences of a Stock Operator. Edwin Levere wrote the book, here's the reason why I'm telling you folks about this. Is this talks about these consortiums that used to trade together. So everybody's, I'm sure, heard of guys like J.P. Morgan, Joe Kennedy. Joe Kennedy and his friends in 1929. Joe Kennedy a lot of folks are really upset with Joe Kennedy because he sold about 3 months before the crash of 29. And him and this guy here were buddies. And so he got out before the crash. There were a lot of big names that got beat up pretty bad in the crash of 29. But the reason why I say that is there's talks a lot about consortiums, how people used to gang up on stocks and manipulate them, and they got outlawed. And that had a lot to do with some of the securities laws and things of that sort. So guarantee you that if this stuff continues out there, there's going to be some legislation. They're going to get involved. You're going to get the government involved. But it's an interesting read. There's a lot to be learned about trading the stock markets and all that. One more time, let's see here. Reminiscences of a Stock Operator. Definitely check it out. Yeah, he did go bankrupt, but you need to understand the story that he went bankrupt. So, yeah, he committed suicide too. So it's a very sad story. But nonetheless, the reason why I bring up the book is that because of these consortiums and stuff like that. So take a read. I used to tell everybody that came into my life and they wanted to trade. I used to read this book every year, once a year. It was my first of the year. It was my New Year's resolution. I'd read Reminiscences. So anyway, just take a look at it from the old dog here, and there's some you'll pick up some interesting things. Yeah, and yeah, somebody mentioned that he went bankrupt. He did go bankrupt, and but it wasn't necessarily because of the markets. And he also, yeah, it was the book on the end of his life was pretty sad, but there's some amazing stuff that he did during his heyday. I mean, this was the time of the Gatsbys. Okay, he was a player. That's all I'm telling you. So we'll see how all this plays out. But anyway, so the Dower, you guys got that? Let's just see what I come up with. I'm going to stay on this long-term chart. Yeah. So this is an interesting chart. This is gold going back. This particular symbol I've got up here only goes back to, looks like 2000 or 01. So, but we got a decent picture here. So, so the question when you look at these long-term gold charts, we're going to go top down, which means monthly down to daily. So we'll just scale through this thing as we go. But this formation that we're in right now, I've been talking about for a while. This is one of these high-level consolidations. And if we look at this, if we look at this formation over here, this was what I call the dragon head, and we're potentially setting up another one of some sort here. Now, a lot of times these things will actually resolve and end up going in the direction of the previous trend. And so we could be looking at a formation setting up like this. It actually is a precursor to the next level. My guess is, and we'll call it a guess, my guess is that if we're going to see craziness in gold, it will be because of MMT, it will be because of inflation expectations, it will be because of all the things that I've talked about today. And for now, though, we've got a monster consolidation going on long term, and you could even, I'm sure if somebody's out there yelling for a double top, and maybe that's what's going to be in play here. So let's take a look at, let's break it down now. Let's go to weekly. So you can see more from an incremental viewpoint, you can see how this thing is trading. I do have a Fibonacci high-low numbers here, and I've talked a lot about this. 1841 is 0.236, 0.382 is 1889, 50% retracement, 1928, 0.618, 1968, and we printed up to that number a couple months ago, and we got up to that 1960 number and reversed right off of that number. But this pattern is setting up. If you look at the PPMs, if you've been watching for the last 45 minutes or so, when I went through the explanation of how these PPMs work, we don't have that momentum reset here. We've got a lot of noise up here, and this thing has not reset. So I'm going to draw in some scenarios, have no idea, not saying this is what's going to happen, but I'm going to draw in some scenarios here, is that we did get a burst up, and then we would get, these things would actually do something like this, and then over here, this would get a burst, and then ultimately, and this would go along for a long while, and over here we'd get a burst, and then you get the sideways and maintenance. That would be the case for a major bull market. I've argued with lots of people that there's as much gold on this planet as you want if you want to look for it. So it's not really a precious metal, and this goes to the argument, because we're going to go from gold and silver, and I'm going to go to Bitcoin. This goes to the argument that Bitcoin is replacing gold. And that seemed kind of ridiculous. I remember a couple months ago I did the video, Bitcoin to 23,000. I think it was at 13,000. Our models actually bought Bitcoin at 11,000, still long. And when you're looking at gold, is it going to lose its favor? Once again, the digital asset is looking forward. That's what it's all about. I've been talking about all of this for a while. So is gold really? I would say gold is a secondary play, not a primary play as we go forward through this decade. It's not the same significance of things. A lot of folks tend to hang on to these ideas that this is the ultimate inflation hedge. Now what we're seeing is with crypto, which I'm going to next. I'm going to cover silver. I'm going to go to one more level on this gold. But this is, the old story around a high level pattern like this. Is it distribution or consolidation? That's always the dilemma. That's the debate that's going on right now in gold. And we see a lot of pressure. And that's why when I saw folks talking about squeezing silver, squeezing gold, and no, it's not going to happen. I used to run a gold hedge desk, and I actually set the desk up at a firm that I ran the third largest division at, and we set up a gold. All we did was work with miners and producers, gold, silver, and some copper. And if you've ever been around any mining, every copper operation harvests some silver. And there's a lot of folks talking about cash. Well, I'll save it for silver, but on gold, this is not maybe the inflation hedge. I think it's secondary. I think it's still out there as a play, but I don't think it's the primary. I think not probably, crypto and digital assets are the play going forward. I might be old, but I don't hang on to old ideas. Okay, I'm pretty good at looking forward about that. Okay, so let's go the final level, which is down to the ultimate noise level, which is the daily. Now you can see this pattern. I'm still looking back in this condensed mode here, but you can see how much noise, and this is just every rally's met with monster amount of selling. And I do think we're setting up a bottom here in gold. I've talked about this on the channel. I traded a lot of gold in 1980. 80 through 83, I was a big gold trader and had direct access to the trading floor and all. Ran a pretty sizable operation then. And so what I'm saying is this is a lot of noise. When you see this, it's like looking at, you're just seeing the noise. And that's one of the things that I talk a lot about. I think it's important to understand is when you're looking at a daily chart, you're seeing all of the noise in the market. You go to weekly, you see less noise, and monthly it condenses, so you're actually seeing better trends in price movement. And that's the way I develop my analysis over the years, is to usually even do a top down or a bottom up. So I look at the noise, what's the next level? The weekly trends tend to be the best trends to trade in for the intermediate and for making larger profits. There's a lot of money that can be harvested out of short-term trading, but when you start to look at trends, you can see the noise here. And in gold in itself, whether it's daily, weekly, or monthly, it's just a giant chunk of noise for the last year and a half, really. And so you can see all that set up here right now. So let's take a quick glance at silver. And we'll keep this condensed view. The spike that we saw the other day on all the hype up to 30.5, that number is going to hang around for a while. It's going to be a tough to get through anything on silver as far as that goes. We're down 30 cents, 27.10. If we look at the market grid, I'm going to stay in this condensed mode and I'll come back to this. Let's go look at the weekly, and you start to see the same noisy pattern. The difference is that you have an upward slope to the noisy pattern versus what we were seeing on the other pattern. So let's take a look at this just so we can get this viewpoint. PPMs, as I talked about, there's too much of a retracement on PPM 1 and 2, but there is an upward slope. We have a nice trending PPM 2 or 21 and 40 period moving averages. The 40 is probably the most positive line in the weekly. That's at 2370. So that's going to be major support down there. And we're just going to most likely going to work this range. And when we go to the monthly, you'll see this pattern even set up more. I mean, it's hard for me to get super bullish on silver here just because of this overall configuration. When we go out to the monthly charts, we just start to see a lot of reality in this market. So somewhere here at 35 to 38, there's so much silver for sale, you couldn't buy it all. And and that's why we see this spike up to 30. And we may grind up to that level. The PPMs on a monthly basis have a nice trend, and this goes to the 40 period moving average. Right now, the 10-month moving average is 24, so that goes with that 23 number that I mentioned a minute ago. So this is where it lies when we start to look at the monthly market grid. The highs was 30, 35. 3031 was an R3, so it was almost exact hit monthly R3. And now what we're working is the low is 2593, S1 is 2586. So we most likely have seen the worst of it. The next level is 2460 on a monthly level. And that takes us all the way into the moving averages, which will be very very supportive down at that level. Yeah, FFE4. I have a good friend and client that is telling me all the time about JP Morgan manipulation, and they'll continue to do it. I get what's out there, but there's just not. Yeah, I don't know if there's anything to be. I guess I don't know if anything. They'll continue to manipulate that market the best they can, and no one's going to get criminal cases. I've heard all of that stuff about that. It's just not going to happen. So let's go to Bitcoin. And here is the daily Bitcoin. And we got, interesting enough, a couple days ago, we got an RTX sell signal, and I'll explain that if you're new to the channel or just watching this live stream for the first time. These lines that you see here, and there's dots in between them, those are the market grid, and they're Fibonacci projections. This is the numbers over here in the grid. So as we look at the daily on that particular day, RTX was 40,482. The close was 46,482. And what it signals is a 2 to 3 day sideways movement. And we typically will hit R1 the day after an RTX. That's where you would be seller at 47,168. The high was 47,350. And then you'll go to usually an S2. 43,756 is S2, 43,749, so almost perfect. That's typical what happens out of these patterns from that standpoint. You know, you can and one of the services that we offer is just that on. Yeah, I'll just show you on the market grid here. If I go to my account, I can go to market grid and just take a look at the silver numbers are in here. But these are all the different markets, so it gives you all the RXT on daily, weekly, and monthly, all that kind of stuff, so you can actually pick up on these signals. And here's, yeah, Bitcoin was right at the top, wasn't it? So you would have known that number that day. These are current numbers for today. But the bottom line is what you're seeing is this sideways movement, probably a couple more days, but then something else is setting up on Bitcoin where we're getting this, probably going to set up what I call a dragon head. This was a dragon head formation. Those of you that watch this channel or come to this live stream, is pretty much once in a while I will cover Bitcoin on the channel on the daily videos. But this is something I've been talking about, setting up this long downtrend. And I mentioned in last week's live stream that if you got anywhere close to this 10-period moving average here, let's see here, what was last Wednesday? What was that date? The 3rd. So we had a low of 30.35 that day, but I mentioned that you want to buy against this 10-period moving average. Here was 36,969, now we got to 38. So, but this pattern is pretty explosive. Now what's going to happen, be my estimation of this, is that we're going to set up another one of these big patterns, possible a dragon head. And let me draw it in just so you can get this, and then we'll go look at a weekly, and then we'll move on. Yeah, so what we should get here is we'll get some type of pattern on this grid. This is the extreme grid numbers, and we'll get some pattern that sets up. Market will stay in between here, and then typically it will go out. I talked about some. I'll see if I can find this calculation. I'll put up some Fibonacci calcs on the upside, but I did talk last time around 54, I think it was 58,000 on Bitcoin is a possibility here. And I just love I just love all the Bitcoin trolls, especially guys like who was it, Mr. Wonderful, all these guys that just call this thing the biggest hoax, and they're just watching it. It's I get a kick out of that. There's a lot of folks that just don't get this new world that we're coming into, and I hope I get to hang around and see a bunch of it. So let's go ahead and go to the weekly chart. And you can see on a weekly, we're setting up this larger pattern as well. We got above the RXT number, 42,978. The high was RXT was 46,755. The high was 48,190. And we did close above that on Friday. That would be a negative. But we're going to set up a giant weekly pattern. If you notice this, let me draw in some stuff because I'm not sure I can describe this well enough. So this pattern that formed over here, hang on, I got a bunch of stuff in the wrong place. Try it again. This tool I use to draw freezes all the screens. But this right here is exactly what we're probably going to set up, some pattern like this. Get the dragon head. This was an elongated, and then I'm going to show you again the PPMs. Momentum precedes price. You come down, and then you can this is how this stuff always works. And you just get same thing here. And they kick in at different levels, beginning of the trend. I call this trend confirmation. Even though this went down, this has a much higher level of volatility. But this trend that we're seeing here now, there's an argument for this is 1, 2. This is a wave 3. And then we're going to set up this pattern. This is exactly the pattern I'm setting up, is some kind of pattern that gets in a typical wedge that most people look at, but in a market grid, it will define it out more like something over here. And what that ends up doing then is setting the tone for another big move up, which will put us into these higher levels. Let me see if I can find these calcs on the Fibonacci. It's funny here, if you see these dots that I just put on the page right here, I did this video, Bitcoin was down here at 11,000. I did this video that Bitcoin would go up to these levels here. The target was 21 to 23,000. That was, I guess, back in October, November when I did the Bitcoin to 23,000. And that was just playing off of these numbers here. And I'm just trying to find something here real quick. Yeah, here they are. Oddly enough, I pick them up on a daily chart. I just want to show you these calculations here. And I believe they're still valid. 54,000. So you can actually quote me on this, but this is the target zone would be minimum 54.7, and then 64 to 69,000 would be the ultimate target range up on top. So this is the big Fibonacci, but I think we set up, like I said, I think we set up consolidation first. That's not going to happen next week or any of that stuff. This is a longer term projection. And with this particular database, I don't have very long database. It only goes back to 17 on TradeStation, so I can't really take you back to any of that other stuff. But that is the projections I still believe are valid. 54 is one of those things that I talked about, and we just do another, as I talked about earlier, these projections of these upslope and these trends have a lot to do with everything. Yeah, I see somebody talking about Wall Street's always played this game, but with manipulated news, media, and control market sentiment. And that's what I was saying. If you watch the first hour of talking, is that when I started in the business in '79, we had control of everything. The news, you couldn't even get corporate news without going to a broker. Just a few articles that were maybe written in the Wall Street Journal or something like that. Yeah, I don't think their time's just over just yet. So, but I think there's some definite things that you're gonna do, be able to do with this, and so anyway, yeah. So we covered the spectrum here. I'm going just to kind of unpack everything we've talked about for almost the last 2 hours. Is just talking about and summarizing everything, and then we'll go in and don't give them to me yet because I can't track them all, but we'll go in and start looking at some individual stock analysis, and I'll do that segment. But the important thing to be looking at as far as we go forward here is to watch all the rhetoric coming out, watch the Fed, watch Janet Yellen, all of those things coming out are going to be important to keep an eye on as far as getting a clue what's going to happen on the markets and going forward, and all the manipulation that we're seeing. That's the thing. And I will tell you, I came up full screen because I'm working on a project, and I'm working on a new channel that I'm starting. And the channel is going to be about disrupting Wall Street, okay? It will, and I'm just giving you full disclosure here, one of the things I've been throwing out to people in Wave Tech and our user base and software and all those type of things is that we're going to be focusing in on doing ETF hacking. So I went and I hacked Kathy Wood and made her 100% better than what she did with the methodology, whatever they're doing. So I'm going to be building this channel. It's going to be basically going through inside of ETFs. I'm trying to get a partnership with somebody who writes a big ETF, big analyst in ETFs, and trying to get them to kind of come in with me, because I think we can really do some amazing things. So I'm going to tell you, if you're tired, if you want to beat Wall Street, you got to stop paying them. So if you're buying their ETFs, you're buying their mutual funds, you're paying. That's where most of the payola goes. Kathy Wood gets 75 bips. Okay, maybe it's worth it. I beat her by 100%, and I didn't pay her anything. And all of those ideas, and I'm going to go through, and I'm not a Kathy Wood troll. I think I think she's a talented woman. Don't get me wrong. I think all of that, but she's also playing into something that I think is big, and we've seen that trying to grow. She's taken advantage of her rock star status, which is cool. That's fine, but these funds are growing, and there's not going to be any way for them to get out of the way. And I'm not going to go into a Kathy Wood thing right now, but if you look at ARK Investments, how the ETFs are constructed, what they can do, because everything within an ETF is dominated by that prospectus, by the set of rules, that internal set of rules they put together. So I've run multiple broker dealers, and the SEC requires you to put your broker dealer manual together. Anything you say in there, even if it's not an SEC law, you are liable for. It's sort of like, if you get pulled off by a cop and you tell them too much and you didn't do anything wrong, but they can use it against you. It's the same thing here. You have to follow those ETFs. So the good thing about the ETF hacking channel, my plan is to go into shredding how these guys are doing what they do, rebuilding their strategies, and showing you how to eliminate them altogether. So that is the plan. So what is that? Earth Cruiser said the Real Vision guys are giving it good reviews. I don't know what that is. So on the Wave Tech training yesterday, I'm just going to go for a few minutes on this, folks, and then we'll dig into some individual stocks. And yesterday, we were talking about taking the little tiny, for instance, if you look at ARC, they have 100% transparency. And I also use a database called ETFDB. You can get every constituent there. I know Jay's on the line. Jay's a master at rebuilding these things. And so he and I and a couple others are going to work together and doing this. But the Princes of the Yin is the book that I talked about many months ago. Absolutely. I'll just tell you there's a connection between my friend, Real Vision, and there's a little connection going on here. I'm not sure where it will go. Maybe Raul and I will be talking sometime. But the bottom line is, if you don't want to pay these guys and stop it, I'm actually going on this channel to show you how to do some of this stuff. And it is going to require that you have a platform to do it on. And yes, I'm going to suggest it's my platform. So if you're a troll, go ahead and say it. He's just trying to sell software. No, I'm trying to change how a platform fee versus 75 bips on your money is a big deal. But I'm going to show you how to do it. Don't have to do it. So far, still a free country. But this channel is going to focus on disrupting these guys. They spend a lot of money on research. They spend a lot of money on this stuff. And so, the lower level of our software is Wave Tech, and then there's Portfolio Expert. An expert is required on this one just because we're doing what's called multivariate trading, which we're trading just what you see on this live stream today. We're doing that. I'm showing you daily, weekly, monthly charts, but we have daily, weekly, monthly models, and then we have a process that we developed called dynamic profit harvesting, and that causes us to harvest money and profits out of the portfolio differently than like I've watched, not in great detail, but I have seen the changes that we have a group, and we've got like spreadsheets on changes in Kathy Wood's and ARC's trading, and they're not doing anything special. They're doing the classic relative strength weighted. I'm still trying to figure out what they're doing. Never been behind the doors, but they're not doing anything different than any other ETF does from a management standpoint. Stock selection is one thing. That's where you always make your money, and that's what we teach in using the platform. So let these guys spend all their money figuring out which stocks to buy. I'm going to show you. So anyway, I'll let you know. I'm going to announce this channel sometime in the next few weeks, and I'm pretty excited about it because it's something I'm very passionate about, and I've been passionate about this ETF hacking, mutual fund manager hacking for over 20 years. We've been teaching investment advisors how to do this for a long time. Unfortunately, most investment advisors are very lazy people. They don't want to do the work. You folks, I've already seen through this group, are willing to do the work. So anyway, just wanted to put that out there because I think the whole scenario that somehow the Wall Street guys are going to lose against the little guy's going to win. That's not a game you want to play that way. You know, GameStop was GameStop, okay? It was way overplayed. These guys got caught. There'll be others. There'll definitely be others that will get caught in the same fashion. There's no doubt. But that's, not going to take over Wall Street that way. That's just, they still have a lot of the power and all of that. And you've got government regulatories. That's why I mentioned earlier this book, Reminiscences of a Stock Operator, because they're talking about being a stock operator and consortiums and all the stuff that got outlawed, coming into the 20s and the 30s. And that was a big game. It's like J.P. Morgan, Joe Kennedy, I forget, there was a group of about 6 or 8. They ran a big consortium. They were flat out manipulating the market, no doubt. So that's where it's at. So anyway, so I'm done with that. But I think that it's going to be pretty exciting, and I don't know if I'll do live streams, not sure. But I just want to get the content out there. It's going to be dedicated to disrupting Wall Street anyway. So okay, let's do it, folks. Let's go, and I'm going to put up. So while we were having fun, nothing happened. The S&P is up $1.50. Pretty boring. A little, like I said earlier, we got a spike up to 39.28, down to 38.78, and settled in the middle, basically unchanged. So, yeah. All right, so let's do the stocks. I'll tell you folks when to stop. I will look at Disney here in a minute. I never did get on Tesla. I would do that. All right, I got quite a few. I'll do some cherry picking. Yeah, so now that I said we stabilize here, we're getting some selling in the futures here right now. The key number on the S&P is going to be 3,900. All right, let's get to some of these stocks. got to bring up GME. We're going to start there just for fun. But it's interesting about GME is this stock went from a $4 stock to a $50 stock, and it's stabilized here. And I actually think that the question I have is, will this gap up here at 250 get filled, right? If we're in the gap filling mode, there might be a trade there. I'm surprised some of the chat rooms haven't been talking about that. Maybe they have. You folks are out there more than I looking at stuff. So that is certainly a possibility. But yeah, so nothing there. PPMs are plummeting, down 19% on PPM1. So this is telling us just on GME, there's a ton of resistance up at 62 bucks right now. Maybe that'll start to flatten out here. But anyway, interesting stock. Hopefully if you played it, you sold anywhere. That gap day would have been phenomenal. And it filled it the next day, by the way. We had that huge range. But let's go on to real stuff. Let's start with, let's go ahead and start with Tesla here. So this was interesting from the standpoint of, this is the daily Tesla. I saw this thing rolling over, but more importantly, it was rolling over on a weekly basis. And we got an RXT sell signal on the 8th of January. And we got our 2 days down, but we've stayed in this inside the grid. And this is basically a dragon head flowing just like this previous one that's down here. So this is setting up a pattern. Typically will resolve itself, and there's probably another level up on this. 10 period moving average is going to be key on a weekly basis. It is 767 right now. We look at the market grid here, that we're looking at 792 is S3, so we got pretty close to an S3 number. And then 767 is that 10 period moving average. Well, that thing is moving up at about 20 handles per week, so that's going to be 780. So probably 800 to 790 is going to be your point where you're going to be looking to buy into this thing if you can get anywhere close to that. This might be close enough. You might be able to start putting some option strategies in down here around $8 or something, around 800. And that's something. PPMs are still positive, but we're seeing that bleed off where just all the stuff I talked about over the course of this show today is that we've got the price, we got the surge in the PPM, so this is likely to be a maintenance mode. Anything in this case above literally 0.25, and we're 2.76, so we're 10 times more than that. This number will hold on this weekly basis. So 760, we'll call it 785 is your premium buy point on Tesla. As far as it rolling over and doing anything big, very low probability at this time. So it goes in line with what I talked about on the S&P and what's going on over there as well. All right, let's go to Disney. I saw that being asked for a lot. Start with the weekly chart here. Disney's trading at the weekly RXT 192.49, high 190. Let's see, 89 is R3 on this thing, so we're pretty much pegged on the ceiling here. But this is something I talk a lot about. This 10 period moving average. You got a 2.05. That's your demand line. So 176 going up $4 per day, 180, 2 days, 185. So you're right into the support where today's lows are. This trajectory is likely to continue, and it'll be interesting to see what the market grid looks like tomorrow. But PPM2 is breaking back above its first, second derivative. All this stuff is doing that thing that I talked about earlier, where you get the acceleration in PPMs, then they go into maintenance mode. PPM1 is already in maintenance mode. PPM2 is in the process, and PPM3 is there as well. So there's a big, a lot more on Disney to go higher. I don't know, does that mean the theme parks are going to get back to full blowing again? I don't know. All right. Yeah, I put up this Jivo on a weekly. What is this thing? $14 stock. Yeah, so it's got targets right now on a short-term basis, 22 to 30 as an extreme. And I guess somebody said it's a carbon neutral fuel. What is it? You know, I don't know anything about this company, but PPMs are starting to turn up again. So we have to do a reset on the trend, but there is some pretty nice Fibonacci numbers here. Yeah, I think you're probably right on streaming. You know, we already know about AMC on the Disney situation, but let's keep moving up. It's later than I thought. I had way too much fun, so we're at 145. So we've got about 10 more minutes. High octane fuel for jets. Interesting. And it's carbon neutral, huh? Yeah. You know, this is something I just want to say on this. Is that let me not be so big on screen, but yeah, one of the things that I think is going to be interesting. Fossil fuels, I will say this, are not going to go away. Not everything's going to be an electric car, but if I don't know much about this company that just came up, but if it is, you know, carbon neutral fuel that can be burned in a jet, those kind of technologies and those things are going to continue to happen. Fossil fuels are too abundant to get rid of, and you know, it's just not going to. I just don't see the whole world being electric, you know. And I don't own a Tesla, okay, and maybe I will someday, but I don't. The point is that the world of energy will change, but the fossil fuels will still be around. They're not going anywhere. I want to remember when it was, probably 1970, mid 70s, when I was a young guy. They were telling us that we were going to run out of all fossil fuels by 1990 or something ridiculous, like 20 years from there. Well, we know that's not true, right? So, yeah, and I agree, Ted Blair. You use what you can until it doesn't work, and it goes to the whole thing. It works until it doesn't, and that's exactly right. Yeah. Yeah, it's just part of what's going to be on this planet. So anyway, let's keep moving on. What time we got? 48. Since I went through Tesla, I want to look at Apple. Apple is really not a nice looking chart. Really isn't. I'm gonna take out these. Well, let's leave the Fibonacci. There is some Fibonacci projections up here right now for us to look at. So high target 148 to 160, maybe. We just, everything goes back to this last projection here, which I think is still valid. I think if anything, we could retest, go into the 148 level. But this chart's getting in trouble a little bit here, and this is the daily. Let's go to the weekly. You'll see a different, little different. You still have the upslope going, but you're starting to see some things fade here. And while the trend is still, the trajectory is still up, it is starting to lose that momentum. And that's what continues to happen here. We look at ppm 3 is about to go through its first, second derivative. ppm 1 is already doing that. They are in good acceleration mode. So what that tells us is the key support on Apple here is at 131.58. And that number is going up. This is weekly. The number is going up about, we'll call it $1.50 per week. So 133, pretty much where we're trading now, is the support line. And we should continue to move maybe up towards R1, R2. And like I said, 148 is probably where this thing wants to go back to. But overall, it's going to have an upward bias, but it doesn't look like it's like the big opportunity of runaway stock like we've seen in the past. Organics here, OGEN, that is breaking above. This is weekly. It's given an RTX sell, but there is some Fibonacci projections here. For maybe a move to $2, 261, 190, excuse me, 198, and got great ppms accelerating here. So that looks interesting for a small cap, micro cap, we'll call it. Let's do PFE. I guess to quote Wall Street, another dog with fleas. Back below all the moving averages. So much for all the money that was going to be made on the vaccines, right? That's where's the money at? Yeah, PPMs are terrible. Big downtrends in PFE. Lots of overhead resistance. 36.90. That is that's big. That's a ceiling on this stock right now, and maybe down toward the grid on the bottom end, 33.30 range. Let's go up monthly. Yeah, this thing's not going anywhere. Maybe monthly. Yeah, there's a 33.38 S2. That looks like that's a good number. Maybe even 32 handle on this one. Not a lot there. Here's was that Fleet Core Technologies, FLT. Not a lot here. Overhead resistance, 2266. It's kind of the ceiling for this thing. Most likely going to stay between the averages, simple averages, 40 and 21, 252, 266. As far as figuring out where this thing's going to go, it's going to be pretty tough. Let's go to UAL. I still talk about this thing ultimately getting up to this 200-week moving average, which is at 67. Maybe it'll get going. I don't know what the new administration is doing about putting any type of, we'll call it stimulus, anything in there that is big at all. So that's going to support the airlines. You know, it's somewhat interesting on what's going on with these things. There are a fair amount of traveling, and I forgot the URL right now, but there is a place where you can go. There's a TSA site, and you can see daily traffic on all the TSA terminals. It's a government site. Might be a good place to watch to see activity in the airlines, to see if there's anything actually going on out there as far as more activity or increase in traffic or those type of things. Might be interesting considering where the airlines are right now. Let's do a quick DAL. Yeah, this one's looking pretty good. I'm going to flop over here, and I'm going to go, those of you who watch the channel for a while, I built this airline Buffett strategy. The short-term strategy is down about 1.2% on the year, but when you flip over to the intermediate, this is something I've been telling folks, and if you're a WaveTech user and you're using the daily, then that's one thing, but if you go over and look at the weekly, you see this thing's actually doing pretty well. It's up 9%. It's up 11% this month. If we look at the holdings right now, this will give us a lot to look into. So we have American. It's been long since December 11/30. Allegiant went long way back. Alaska is long from August of last year, 11/16. You can see the dates here. The oldest one is Alaska. That was one of the, if you recall going back, or if you go back and watch the video I did back in May on taking advantage of Warren Buffett's mistake. This was an amazing opportunity because the short-term models, that strategy made 100% from May to year end. And now this one is the secondary strategy. So if you're looking to participate in the symbols going forward, in the airlines going forward, this would be the portfolio you'd want to have with weekly trades going on. So most of these came in, like I said, November, December, some in October. The oldest one was right at the beginning of September, which was Alaska Air. And you can see the returns on these things right now. Allegiant's got the biggest at 18%. Oh, no, I'm sorry, the second biggest. Alaska Air is up 37%, up 10. So you can see these numbers. And so back to the summary page here. You can look down here and you can see it was minus 2% for January, and February is up 11. So if you're playing airlines, this would be the one that you want to play for sure. We've got about 2 minutes to go, so we'll watch the close together like we usually do. S&P's printing even 50 on, now it's, so we'll just see see if we get any selling. Be honest with you, what looked like was going to be an exciting day after the big early reversal turned out to be virtually nothing. Yeah, well, I'll do a couple more stocks as soon as the market closes, and then we'll call it quits for the day. I appreciate everybody hanging out. Yeah, I think 3,900 is safe. I do too. Futures are trading 39, and there's a little bit of a premium. I'm going to flop over to this other page for just a second here. SPX 07, 03. Yeah, we're a long ways from getting anything that looks like that. That's going to be an issue. Yeah, maybe I'll do a little run on something that might be an interesting portfolio to build too, is focus in on these car makers. So we're down to the final minute here. Nothing really going on. Pretty quiet. 0325. I think we printed down over here a few minutes ago. We printed down. We did hit a 97.50, and then that last little sell-off we hit 99. And it looks like there's kind of a neutral bid, little selling coming in right now. This is almost the bell. We should get the bell here in just a few seconds. There we go. There's the bell. And the opposite happened. We found a little bit at the close. And yeah, pretty neutral. Well, a flat day to say the least. So nothing really there as far as the markets go. And, I had hopes, after that reversal early this morning right off of that STX number. And I actually was hoping that we maybe would get an STX sell. One of the things I do want to bring up a chart here, and we ended up getting a neutral close out of this. And I'm just going to go to a daily chart here real quick on SPX as we close down this, and then we'll do a couple more stocks. And then it's in and out burger. But yeah, Fernando, WaveTech is neutral brokers. We tell you what to buy and sell. You use anybody you want to do that with, that you want to trade with. We literally have clients all over the planet. So let's. What I want to look at, yesterday's high was 18. We printed a 30 high. Yesterday's low was 02. So we had an outside day. Unfortunately, if we would have closed below, this is SPX. If we would have closed below 01 today, below S2, that would have been a reversal. As it turns out, it's a nothing. I guess we'll call it a nothing burger. Today was. Had a kick up in volatility. The good news is because of the expanded range, there'll be a slight increase in the market grid tonight, which is somewhat encouraging because that narrow market grid just stinks of a minor top, and those tops are 5 or 6 days at best as far as that goes. So there's not really a lot there. So let's take a look. Let's do a couple of these autos. Somebody was talking about GM. Let's take a look at GM. The only encouraging thing I would tell you is maybe there's some Tesla owners out there, but Tesla just doesn't have, they're not nice. They're not a BMW, they're not an Audi, they're not a Mercedes-Benz. So, I think some of the competition that's coming in with the higher end folks will probably do well. Do I want to own a General Motors electric car? Probably. I don't know. I'd rather have a Tesla, I think. Maybe the same thing with Ford and all of the others. We'll just see. And like I said a few minutes ago, this fossil fuel thing is not going away. it's too convenient. I mean, do you have 3 hours to charge your car on the road? Maybe it's a good way to get a break. But any of us that, if you travel across the country, if you went from, I'm in Arizona and I was going to go to Florida on a road trip on a Tesla, it's going to increase about 40%, I think, more time to get there because of refueling. So that's an issue. You get a little time outside of the car, and I get there'll probably be some trendy stuff that gets set up around Tesla and electric car charging centers. That'll be an interesting time, and hopefully they find a way to charge the cars in half the time or a third or whatever. That's, I'm sure, the goal, right? So, but I don't know that these auto dealers have done pretty good, and they're trying to ride on the coattails of Tesla. We know that. We'll have to see how that all works out. Let's put up Ford. I know they made a big commitment. These charts look the same, both Ford and GM. Now, Ford has a target around 14 to 1530 here. That's somewhat encouraging. That's decent. That's 30, 35, 40% returns. Yeah, but isn't the whole NEO thing turned pretty? Yeah, haven't looked at NEO for a while here. Let me go back a little ways here. Similar kind of pattern. Here's that big formation setting up here. So I mean, as far as an investment, this thing's fairly played out. Not saying it can't go higher. Not really saying anything about it. The PPMs are in a position to try to rotate. Support here is at right now at 53.50. That's about all I can pull out of this. Maybe you can look at an S1 is 55.05. So that's pretty much the mark on that one. So yeah, so here's TXMD. Somebody said they're long this thing. Yeah. I'm really disappointed. I found this really cool channel that they're just going through all the different types of technologies around batteries that are out there right now. And somebody's going to make a big breakthrough, and that will be a game changer for sure. Faster charging, more capacity, the story with the battery, right? That's what it's all about. And, so that'll also help a lot with other aspects of things. Yeah, as far as this TXMD, we're not quite getting a weekly RXT sell, but it's pretty expanded out. If I look at the PPMs here, they're rolling. This is doing that three ways. All three indicators are spiking at the same time. So there's a lot there. Easily, you'll see the convergence. It's declining of the 200 day to the current price. So that tells you that this 200 week, not 200 day. 200 week is at 387. So 350 plus maybe on this one. Maybe there's more, but that's just all that can be seen off of this chart here. Yeah, I did, Tobias. I did look at that Porsche. I am a former Porsche owner. I had a 930 back in the day. I called it my crash mobile. Jay can tell you about it. 930 turbo. So anyway, yeah, it was actually an 86 turbo. In today's standards, it's pretty wonky, pretty clunky, but it was pretty fast for the time. We had a lot of fun with it. It was like driving a boat. You had this big, heavy back end. You go around cloverleaf sideways. It was kind of scary sometimes. Yeah, I'm thinking in and out. I think it's in and out day. That's a definite. So yeah, folks, thanks for coming. We had 500-600 people hanging out today, so that was good. Like I always say, I enjoy these things. The midweek is interesting for me because I have videos on Monday night. We do a live training on Tuesday. Video last night, live stream video again. So it's pretty crazy to do this, but it keeps a lot of stuff going on with the channel. A lot of folks aware of what's going on with overall analysis, which is driven by the whole wave tech situation. So I just put that up on the screen to finish out. This is a good way to get introduced, support the channel. Didn't see a lot of super chats today, but I appreciate I would rather have participation here so we can go out and disrupt Wall Street. That would be the best way to go. Yeah, Earth Cruiser, you're welcome. Thank you, man. Appreciate it. Yeah, Scott, thanks for showing up, man. Appreciate it. Guys, hit the like button, sign up, become part of the group. We have a lot of fun in the wave tech training. It's pretty serious stuff. Really, one of my favorite lines is, stop speculating and start managing your money. So that's definitely what we're looking at here. So folks, I'll give you a little music. When the song's over, we'll sign off. Thanks again for participating. Really, can't tell you guys how much it means to have all the participation on the channel and everything that we do.